Let's go across to Siddhartha Sanyal, Chief Economist, Head Research at Bandhan Bank. He's now with us. Siddharth, you've looked at the global markets as well earlier and, summing up the inflation and the rupee. Can you just talk to us about, yields across the world going up and rupee being at a record low and dollar being at a high? I mean, how would you read into all of these things? And, as they say on Wall Street, everything, when there is a problem, everything comes together. How would you just sum up inflation and rupee for us?
Well, globally, there had been an environment of significant macro headwinds, and India is also cannot really stay completely insulated. So, commodity price cycle is still very, very unclear. Domestically, while the IMD's forecast about monsoon is pretty good, still food price related inflation stays relatively high. So overall, inflationary pressures remain. So even if today's print can be a tad softer, the next print can be a tad softer, that will be more statistical in nature. So overall, inflation, what the RBI is projecting at around 7.5% to average during the first half of the financial year, can actually stay there or a little higher. So which is a very significant zone, much higher than the RBI's upper tolerance band. So there is no two way about it that the central bank will be delivering some more hike. And if you see RBI's current style of hiking or style of acting rather, they are trying to front load a lot of their moves. During the time of the COVID cuts, they had front loaded the cuts in two policies. They had cut 115 basis points and then they had stay put. Now in the last two policies, or rather one off cycle move and one scheduled policy move, they have already delivered 90. But given the levels of the repo rate, I think there is some more upside still left, and RBI looks biased towards deliver that earlier than later. And possibly in the second half of the year, they will start going a bit slow. So overall, there is little more upside or some more upside on the repo rate side. But I agree with the other speaker that at this moment, my sense is that there should not be too much of or equivalent amount of upside to bond yields. That has actually priced in a lot of hikes. So there can be a bit of relief here and there on that particular front.
Right. Also, could you just talk to us about the stickiness of the inflation? And a lot of people in the markets are now pointing out that inflation in India came in late, so it'll go away also slightly late. Can you just talk about that as well, if you have any thoughts on those fronts?
Absolutely. I think the important issue here is unlike some of the previous phases in recent years where inflation has shot up more than the current levels also. Often it had been the case that came from just one or two items, typically perishables, extremely high inflation. But that kind of inflation typically that shoots up very quickly and corrects also pretty quickly. If it is for a perishable or one or two vegetables, short cycle crop, typically it corrects quickly. But if you see the current nature of inflation, the contribution is coming from a number of areas. The one is very clearly food prices. It is coming from metal prices. It is coming from energy prices. So a significant number of areas which is actually contributing to the current phase of inflation. And that's why it can remain a slightly more sticky in the near term. So, but the interesting thing here, both RBI and the government seem to be trying to act in tandem to some extent to bring in some bit of relief. And hopefully that should provide some result going ahead in the coming months.
When we just talk about the sort of pricing in that you just mentioned about in terms of the yields, in terms of the projections for inflation, you think crude oil has to come down for that inflation projection across the world because that indicates consumption? You think those will be the first signs, or dollar index has to probably cool down? How would you look at the first signs of inflation coming down?
I think important thing is how global growth forecasts would move over the course of the next 3 to 6 months or maybe a little beyond that. Because at this moment, commodity prices are generally very, very high, whilst the central banks are tightening, as well as central banks are withdrawing liquidity from the system. So that should show up some bit of effect, both on the growth forecasts, growth expectations, and that should have some kind of an effect on the commodity price expectations as well. So if I mean, we should be able to see some effect of that going ahead over the course of the maybe 6 odd months, and that might provide some bit of early sign, if at all. But that also we are talking about maybe towards the end of the calendar year rather than anytime sooner.
Okay, well, thank you so much, Siddharth, for joining us today at ET Now and helping with your take on what's lying ahead and what's your estimate where the rupee as well as inflation is headed.